Alrighty, ladies and gentlemen, and here we go. Everybody, welcome back to I Am Mastery Academy Bootcamp right here on Go Live with your master educator, Manny Quinones. Ladies and gentlemen, I am so blessed, grateful, and excited to be able to be here with everybody. We like to keep the intros short and swift for those that are watching the pre-recording, but please let me know where you guys are tuning in from. You can represent your city, your state, your town, your team right there in that chat box, and let's see where people are calling in from all over the world. So excited to have you guys back here. So let's get this thing rocking and rolling. Once again, I want to welcome everybody back to the I Am Mastery Academy Bootcamp right here on Go Live. I'm your master educator, Manny Quinones. I am chairman leader, one of the harmonic scanner master educators, strategy developer, and also voice of the I Am Academy. It's been my pleasure and my honor to continue to serve this community. This year, the kickoff of 2020, we started a brand new academy where we wanted to be able to really teach Forex in depth and give people a really strong foundation to training. So that way, as they expand from our platform and they go into different products or they go into different strategies, they will know how to keep up with that strategy, keep up with that product. They'll know how to execute trades, look at charts, manage their markups, and the whole entire nine, right? I believe that building a foundation on concrete is the best foundation that you can build in the world. Now, please just remember, for those of you that are watching live and for those of you that are watching this pre-recording, this is our last week, our last session at 9 a.m. Eastern Standard Time, starting next week. Or currently, if you're watching this on a re-recording, on a pre-recording, our new time is going to be 10 a.m. Eastern Standard Time. Once again, that's 10 a.m. Eastern Standard Time. Alrighty, ladies and gentlemen, and that's going to be the sessions are going to be Tuesday, Wednesday, and Thursday. As we continue to wrap up this Go Live Bootcamp, we will return to live trading and giving you guys pips like we always do. So super, super duper excited for that. Please remember, before we get started, that you guys can either come to my Go Live channel right over here, as you guys see on the screen, right? Don't mind the totally weekly views that say 0. There is a coding error in the system. But remember, when you guys come here to my session, you guys can click on favorite sessions. And by clicking on favorite sessions, you can get access to all of our favorite past recording videos and also the I Am Mastery Academy bootcamps for yourself to replay or for your teams. But to make it even easier, ladies and gentlemen, you guys can simply come to my website, educatormannyq.com. Remember, by coming here to educatormannyq.com, you guys, once you're logged into Go Live, you can simply click Access Channel. That will take you right to our Go Live channel. So you and your teams don't have to browse and look around to find the channel. They can come here, go directly to the channel. And if you have new members, you can just put them through our new member training right here. Now, when you want to get access to the pre-recordings, you guys can go right here to Go Live. By clicking on Go Live, you can subscribe to our Telegram community right here, which we're going to be changing to Pip Talk this weekend, as all Go Live educators have to shut down the previous Telegram community from scammers and from fakers. So we want to build a better community for individuals to not get poached, to not be scammed, and to get access to actual training from 6- and 7-figure verified traders on the Go Live platform. So this will say join our Pip Talk community starting this weekend. You can download our comp plan, our compound plan here to remember to learn how to take trades at 3%, 5% of your account. Some free YouTube videos, access our Go Live, but most importantly, you can come down here and watch all of our videos, which is cleanly laid out for each of you. So if you guys want to watch the new I Am Academy Bootcamp videos, you guys can come right here and watch the bootcamp videos in order. If you guys want to go more advanced, you can watch the market geometry training or the correction class training. And if you guys want to learn my strategies, you can learn my divergence-based strategy with the multiplier or the harmonic scanner strategy right over here. So it's all laid out for you. And when you click this video, it will bring you right to the pre-recording. All right. So with that being said, let's get ready to rock and roll. Now, as you guys remember, we are doing the Go Live Academy. We are doing the I Am Mastery Academy here on Go Live. We are up to the 200 series. So yesterday we did an intense class on trends. And today we're going to be doing an intense class on support and resistance. All right. So very, very excited about this here for you guys today. So let's jump right into the charts and then take a look at what we are going to be doing over here today. All right. So let's write this up here. Let's get this thing rocking and rolling. Okay. So today's class is going to be an in-depth class on support and resistance. But not only are you going to learn support and resistance on this class, you're also going to learn supply and demand. You're going to learn price reversal zones, or what some people call order blocks, I believe. Okay. You're also going to learn about your trading zone. Okay. So how to find your actual trading zone. And then last but not least, you guys are going to learn how to plot the points, right? Or basically how to mark this up on your chart right over here. So this is extremely important. Now let's get right into this. Before we get into the chart, let's do what we always do and then show you guys an example and then jump into the live market so you guys do not get distracted by all the price. So let's do a clean example and then we're going to come right down here to look at the actual chart. Okay. So what exactly is support and resistance, right? This is something that's very, very easy to understand, especially for the new traders that are here. So let's talk about this real quick. Okay, that way we can start jumping into some of the more advanced stuff within the market. Okay, all right, perfect. So anytime that you're looking at the market, you're going to notice that there is going to be the price, right? The price, the candles, the highs, the lows. These things are always going to, let me see, I believe it's the ghost feed, so we can make this more realistic. There we go, all right? So let's put this here. Okay, I'm going to put this here for you guys just so we can get a better visual example of candlesticks in the market. Okay, so let's take a look. Anytime that you're looking at price, you're going to notice that price is always bouncing around. All right. On yesterday's class, we went through trend lines. So we basically talked about how to connect 2 or 3 points or more in the market, so you can visually see exactly when the market is in an uptrend, when the market is in a downtrend, or when to help you see a significant price reversal. Meaning, if the market broke the trend, right? The trend lines serve as an area to help you understand that the market might shift the directions, right? Nothing is ever 100%, but the entire purpose of this, again, was to give you a visual understanding, right? To have your mind comprehend what's happening in the market. Now, support and resistance works the same way in the market, okay? But there are different types of support and resistance and different ways to interact with them. And that's why we're going to get really in depth today with exactly what support and resistance is. So let's use this example of resistance at the high, and then let's create what's known as support at the low within the market over here, okay? So just keeping it basic for 2 moments, let's keep all this color-coded, just keeping this basic for 2 moments, we can understand that any high point, resistance equals high point within the market, right? So this high point, right, serves as an area to potentially sell off in the market, right? So anytime that the market comes to a potential resistance in the market, so that means that anytime that the market is shooting up, okay, anytime that the market is beginning to uptrend, okay, the market is beginning to rally and uptrend, it's going to eventually come to an area known as a resistance, right? And when the area comes to this resistance area, this could be a potential point in the market where a trader can look for a selling opportunity, right? And the same works with the support. Whenever the price is filling, or when the price is falling or downtrending within the market, right? So it could be counter trend trading back to the trade. It could be just an overall big downtrend. But anytime the market is coming back down to an area of a trend or a support, right? This serves as a potential area to buy, right? This creates a visual area where traders know that price can potentially react at this area. So if the market is going up, it's going to eventually run into a ceiling, which is known as the resistance. Okay, so let's write this again, which is known as the resistance. And when price is coming down back to that area, this is serving as an area to potentially buy. And then this is known as a support. Now, I want you guys to notice something here, because as we get deeper into support and resistance, it's really easy for people to get lost with the terminology. And that's because it's not so much of a terminology that you need to understand. It's more so of the concept of what exactly a support and resistance is. Because support and resistance is one and the same thing. The same exact price level in the market. So let's say this price level is 134.00 right over here. So let's say this is 134.000 price level. right? So while this area might be a resistance on this side of the market, it might be a support on this side of the market. So support and resistance is essentially one and the same thing. So this is why you will see advanced traders, right? Support, resistance. You will see advanced traders call support and resistance structure, STRUCTURE. They'll call it structure or say structure in the market because support and resistance is one and the same exact thing. The word support and resistance is really only for new traders. This is really known as a structure level in the market. This serves as an area in the market that traders can use to identify potential areas of support and resistance. Okay, so if that does make a sense, then just type in 888 in the chat box. Okay, now there are different types of support and resistance within the market. There are different ways that you can interact with support and resistance in the market, right? So the first type of support and resistance is the regular structure, as you guys know, right? That's known as support and resistance. Now, the second type of support and resistance is known as supply and demand zones, okay? It's known as supply and demand zones. So what is the difference between support and resistance and supply and demand? Supply and demand, right? Let's put this supply and demand, right? This equals larger areas of liquidity, right? Larger areas of liquidity in the market, right? This is basically, right? This is basically the support and resistance levels that are set by the bank. Okay, so supply and demand areas are large areas of liquidity. So that means that there is a lot of money at that potential area, right? So let me see. I'm trying to get like a little type of emoji over here that I can't seem to find that I want to be able to put here. Let me see. All righty. Well, I cannot seem to find this on the go. Should have had this prepared for you guys right over here. All right, definitely can't find it, but it's okay. All right, so we'll just, you know, whatever. We'll just put this guy over here, okay? So these areas right here, these supply and demand areas, they serve as larger areas of support and resistance in the market, okay? These areas are a lot more volatile. So you will see bigger moves happen from a supply and demand zone than what you would see from a support and resistance. As an example, let's look at this structure point over here in the market as an example. So let's say we have this area as an area of support and resistance, and then boom, and then we have this area as a support and resistance. You see that in a typical support and resistance area, okay, price will give you a little reaction, right? It'll bounce to the next area of support and resistance. You'll create a trade analysis, and then from there, it might bounce to another area. Now, whenever price comes to a supply and demand zone, which is these large areas of liquidity, normally around large round numbers, okay? So normally, which equals large round numbers within the market. Okay, so you'll see these at big levels like 140,000, right? 120,000, right? If I can make this a better example for you guys right down here, right? You'll see these supply and demand areas at much bigger round numbers. And when they come to these big areas, you will have a tendency to see a much bigger reaction. So you will get a big move off of that supply and demand area. And this is why traders love to trade off of supply and demand, because they know that big moves could potentially be imminent. And I want you guys to really learn and how to identify these areas as we're going to get into the live markets right now, because they're going to serve a key role in your trading in the future. When you're trading pullbacks, breakouts, retest, when you're trading market reversals, anything like that, you're going to see them around these round numbers, and you're going to know that big moves are there. So I want you guys to really keep an eye on supply and demand. Now, there is also something in the market. Okay, let's do this. There's also something in the market known as price reversal zones, okay, or what people sometimes call order blocks, okay? Now, these price reversal zones, this is a golden ticket, okay, these price reversal zones. So let's put this over here, okay? These price reversal zones, okay, let me see how to put this in a way for you guys to understand. Price reversals, you cannot guarantee nothing in the market, but a price reversal zone exhibits certain features. And when this price reversal zone happens, I'm going to show you guys so many concepts right now. But when you guys see a price reversal zone, this is almost one of the best areas to trade off of a support resistance or supply and demand. Any supply and demand area and any support or resistance area can become a price reversal zone, or what's known as an order block. But you have to see how this works. So let me give you a good example. Okay, let's give you a really good example right here. A price reversal zone is basically when you get two types of hits on the inside and outside. I want you guys to write this down in your notes because this is going to be big for you guys. Whenever there are two hits on the inside and the outside of a particular structure level. So what do I mean here? Okay, I mean this, okay? Let's come here. So you see this price is coming up to this area and it hit this resistance right over here, right? It hit this resistance. So we're going to make this black and we're going to make this prominent so you can see this. So this hit this on the way up. The market reacted. Then the market broke through the level and came back and hit it a second time right over here. So I want you guys to check this out, right? So when you have two hits in any direction, if you have two hits on the inside and then on the outside of one particular structure level, so let's say this structure level was 13400 over here. Okay, so let's say that this PRZ, this price reversal or order block, what some people call it, hit at 13400 right over here, right? That's this zone right over here. Okay, so it was resistance, it was support. We had the hit on both sides, and then this became what's known as a PRZ zone. So I'm going to write this up and we're going to make this dark. Okay. Whenever this PRZ zone occurs, this is one of my favorite trade setups in the entire market, ladies and gentlemen. All right, one of my favorite trade setups in the entire market. Once this happens and when price comes back to this price reversal zone, you're almost guaranteed every time to see a nice reaction off of that particular area. And I'm going to show you guys so many examples right now. Once price returns to the price reversal area, this is almost a guaranteed trade any time that you're trading in the market. And this is very important because this is going to help you learn how to trade pullbacks. This is going to help you learn how to trade breakout and retest concepts within the market. This is going to help you trade big areas of supply and demand by seeing these price reversal areas. So we're going to start jumping into the live market. Now, if that makes sense, I want you guys to type another 888 for me in the chat box. And then we're going to come over and we're going to talk about trading zones right now, and then how to plot your supply, your demand, your support, your resistance, and your price reversal zones within the market. And this should really help you take charting to the next level. Okay, so let's come down over here. Let me take a quick screenshot of this. Okay, we're going to take a quick screenshot of this for our notes. All right, perfect. Now let's come on over here to something fresh over here. Okay, we're going to remove all these drawing tools. Okay, all right, now we have a fresh chart. So the first thing that we're going to do, ladies and gentlemen, is we're going to talk about plotting supply and demand. Okay, supply and demand is going to help you create what's known as your trading zone, right? Because when a trader comes and looks at the market, a new trader, you guys are looking at this market and you're seeing these swing highs, these swing lows, and everything seems to be all over the place. And what you're looking to do is you're looking to make sense of this. So in order to make sense of the market, you need to know where you're trading in the market. Where you're trading is known as your trading zone. So you know the exact area that you need to focus on. Does that make sense? So the best way to do is I want you guys to come to your daily chart. Okay, you guys are going to come to the daily right over here. Now come into the daily, you're going to zoom into the daily wherever price is at. So let's zoom in. And right now we see that we're on the daily time frame. The daily time frame simply means that each one of these candles is 1 day. So as you see, this was September. Look, this was August, September 27, 28, almost my birthday right over here of 2019. So from August 27th of 2019 to January 16th of 2020, this entire market has been doing nothing but uptrending the last 6 months within the market, right? So why is this important? Because on the daily will let you know the monthly highs and the monthly lows, and this will help you find your trading zone. So if you look at this market, what are the areas that that stick out to you the most, the high and low areas, right? You have this high area. You have this high area right over here. You have this low area right over here in the market, right? So what we're going to focus on is we're going to focus on the last swing high. We're going to focus on the last swing high and the last swing low. So let's look at it like this. This is the current market trend, right? This is the current market cycle right over here. So where was the previous low? Where the market is at right now, where did the market start at the lowest point? It was right down here, right? If you look back, the market started right down here. So this is known, right, as your demand zone within the market. So you're going to come over here. You're going to highlight this area, right? You're going to highlight this area right over here. Remember, we talked about big round numbers. So look, this area is at 10500 flats. Look at that, 10500 flat. Okay, so we're going to open this up. Okay, and then here goes your demand zone in the market, right? Here goes your demand zone. Here goes your demand zone in the market. Remember, the demand zone is the larger support and resistance zones. So these are the areas where you get the biggest jumps, right? It came to this demand zone, massive jump. It came to this demand zone, what happened? Massive jump, right? So this was the last low. Now, if you look at the last low, take another line if you need, and look at the last significant high, right? Look at the last big high within the market, which is right over here. This was it's not this one. It's not this one because the market was high and here the market had came back to the low, you see? So this is not the previous high. This is the previous high set. So what you're gonna do is you're gonna take this area, right? And look at how this area is around the big round number as well, 112, right? So let's look at 112 right over here. We're gonna highlight this and then we're gonna bring this out. We're gonna make this red. Here goes your supply zone, right? Here goes your supply zone in the market. This is where the banks are selling and buying at supply and demand zones. They do not want price to be in these particular areas. So these are the areas that you guys need to learn how to eyeball within the market, okay? So now once you found your supply zone and you found your demand zone and you come on over, this entire area right over here, this is known as your trading zone. Right over here. This is the exact area in the market, right? I'm going to delete this, but we're going to write this up. This is known as your trading zone within the market right over here. This is the area that you want to pay attention to. This is the area where you're looking for your trends. This is the area where you're looking for your support, your resistance, your patterns, your trade setups. This is the area where you want to focus on the most because the data that's provided in this area is going to give you the most relevance. It's going to give you the most relevant information that you need to set up your next trade analysis. All right, ladies and gentlemen. So let's get rid of this trading zone. All right, well, you guys know this is your trading zone. So let's leave this here. And then I don't want this green. So we're just going to put this over here. So now we know that this is your entire trading zone right over here. Okay. So we're going to get rid of this. We're going to get rid of this. Okay. Now let's focus on your support and your resistance levels. Okay, we're going to focus on your major support and resistance levels. Now, remember, in order to find a support and resistance are just invisible floors within the market. And support and resistances, they work very well with trends because support and resistances work like this. Let me show you. The market will create a level area of consolidation, and then the market is going to rise out of that area. Then the market's going to create another level of consolidation and then rise out of that area. Then it's going to create another level of consolidation, and then it's either going to keep rising or it's going to fall like this from that area. Once it falls, it's going to create another level of consolidation and then fall again within the market. Right? So the market is always either going up or down, right? It's going up or down, but there are small times where the market is going sideways. Every time the market goes sideways, the market is creating new levels within the market, right? So I'm just going to be marking up small levels for you. I'm going to delete these, but we're going to mark up small levels. The market is always going to create levels for you in the market. Now, if you guys remember yesterday, we went over support and resistance. We went really, really in depth about support and about trends, right? We went really, really in depth about trends, how to connect trends, how to validate trends, the theory of trends, right? We went through a lot yesterday. Now, one thing that you're going to notice is that once you start to connect your trends to these areas of support and resistance, right? Let's say this is your uptrend. No, let's just make this black, right? You're going to notice that the only things that trends are actually doing is trends is just helping to carry price up into new levels. The trend is either carrying the price up into new levels or the trend is carrying the price down into new levels, right? And then that's the whole purpose of support and resistance and price action. And remember, this is called price action. This is technical analysis. No matter what trader you follow, no matter what strategy you learn, no matter what educator you learn from, don't let nobody ever, ever, ever in your life tell you that price action or support, resistance, trends, technical analysis doesn't exist. That is a lie, and that's something that they say to try to elevate and bring clout to their specific strategy, because it's absolutely not true. I went on to make hundreds of thousands of dollars trading just off of reading these levels and these price actions. So if it wasn't true, how would myself and millions of traders before me have made so much money? Why would so many people around the world need to know this as the base of trading before learning anything else? You always need price action. It exists. But the thing is that price action is not perfect. Price action can get sloppy. Support, resistance, trend, they can get sloppy. And they can also be very subjective, meaning that the way that you look at it, you might look at it one way, another trader might look at it another way. So the way you look at it is subjective. And this is why, right? That's because of your expertise, right? But this is why it's important that you guys continue to really master how to do this. That's the whole purpose of this I Am Academy, to give you in-depth training that you're not getting nowhere else on the internet. Okay? So let's talk about this. Okay, we're going to come back to the levels. Now, these levels in the market, that's where the trends are carrying the price up or down, these levels are going to create what's known as your areas of support and resistance, right? And we're going to do this on the live chart. But what you're going to end up doing here is, as you make these areas of support and resistance, these areas of support and resistance are going to serve, right? So we're going to, let's drop down to this example. We're going to come down to the 4 hour now. Okay, we're going to come down to the 4 hour. Let's get rid of all of this. Okay, we're going to come down to the 4 hour now. Now we're going to show you guys how to mark up your support and resistance and why it's so powerful, right? So remember, this was the demand zone right down here. So the first time that the price came to this demand zone, we've seen a big reaction up. Now, the second time that price returns to this demand zone right over here, okay, we know that price is expected to go up. Now, when price is going to shoot up, you need to know, right? You need to have some type of concept of where you're going to sell and buy, where your targets are going to be, where exactly is the market going to go and reverse. Because remember, the market's not just going to shoot down. It's not just going to shoot up. It's going to create structure. It's going to go up, down, up, down, up, down, up, down, up, down, right? So it's going to follow this structure of highs and lows in the market. And these highs and lows will help you as a trader create areas to buy and sell. These will be the support and resistance, or the structure levels are going to be the areas that you need to eyeball to see where to expect trading. Okay, like to expect your trade analysis. So let's show you, we're going to plot up support and resistance right here. And then by plotting up this support and resistance, we're going to show you how this helps you create areas in the future to buy and sell. So now remember, we talked about this entire area being your trading zone. Now, why is this important? This is important because this trading area, this downtrend from your last supply zone to this demand zone, this last area, this is the information that you need to use to create your future support and resistance in the market. Okay, so we was at the daily for the supply and demand. Now we're jumping down to the 4 hour to create levels of support and resistance. So now let's come over here, right? We're going to come over here. We're going to make a rectangle. And now we're going to start looking at the different levels here in the market. Okay, so the most important levels are going to be the highs, the swing highs, the swing lows, the swing highs, the swing lows, the swing highs, the swing lows. Let me give you a visual example. This was the highest point. This was the low. This was the next swing high. This was the next major swing low. This was the next major swing high. This was the next major swing low, right? So if you look at this, right, before I create the areas of support and resistance, these were your levels in the market, right? These were your levels right over here in the market, right? Here goes your levels right here in the market, right? If you guys really knew what I was teaching you guys right now, I don't know who on here is brand new to trading, but I'm telling you right now, I am giving you guys $1 million concepts right now. So here are your levels inside of the market. Okay, guys? So what we're going to do is we're going to get this area, these rectangles, and we're going to draw up our structure levels. So I'll make this, all right, we'll just make this black for now. I want to make this black, and I'm just going to darken this up. I don't want to like really block up the chart, but I'm going to darken this up to show you. So I'm going to zoom this out to make it longer. Okay. All righty, perfect. And then we're going to bring this over. Okay. So here goes right here, your first area of support. So let's get rid of this level. Okay, perfect. Now we're going to look at the low. Here goes the low, and then here goes the high over here, right? So this is the separation of your second level. So let's delete that. Boom. Now we're going to take this, copy it again, and we're going to look at the low over here, the low of this point, and then the high of that level down here, and we're going to get rid of that, right? Now let's get rid of this over here. Now here goes your major areas of support and resistance in the market, right? Now that you have these big areas of support and resistance, now we're going to look at the future market, right? So let's just write this up. Watch this. This is your support and your resistance, or what's known as structure, S-T-R-U-C-T, S-T-R-U-C-T-U-R-E, right? Here goes your support and your resistance, or also known as structure. Okay, and we'll keep that black. All right. Okay, so this is going to be area to sell / buy, right? So this is going to give you your buy low, sell high theory and concept, right? So here goes your structure area where you want to buy or sell. We're going to put it up over here. We're going to put it up over here. Now, let's move over to see how price for the last 6 months reacted to these specific zones, right? And look, we can even put another one right over here. I'll be honest, we can even put one more. I'll just put a little bonus line right over there in the middle of that zone. We can even put a little bonus line there if we want, and we could put a bonus line right over here if we want, which is about 50% of each zone. Ready? So let's come over here to the future, and let's look at how these areas served as areas to buy and sell. So let's delete this. Let's delete this. Now let's look at the market over here, right? Look at your support and resistance areas. So we're going to start with the first one, and we're going to look at it, right? We're going to come over here. Look, when price broke through this area of support and resistance, every time price returned to this zone, boom, area to sell, right? Price returned back to the zone, area to sell. Price returned back to the zone. Whoops. Price returned back to the zone, area to sell. Eventually, it broke through that zone. You guys remember the SRT rules of engagement, right? Remember the theory of trends, the theory of support and resistance, 2 hits, 3 hits, 4 hits. You always got to keep that theory prevalent when you're trading. So look, boom, sell, sell, sell. Now, eventually, it breaks through this area. Now, once it breaks through this area, look what ends up happening. This same area to sell ended up becoming the same area, which is good for you to buy. It broke, buy. It came back to this zone, buy opportunity. Came back to this zone again, another buy opportunity. So you see how we use the previous data in our trading zone to help us predict future areas to be able to buy. This is how traders get like, okay, this is where I want to buy right here. And then they're looking for reasons. This is where the analysis comes into place. Oh, it came to a buy zone. Is there a W? Is there a triple bottom? Is there an inverted head and shoulder? Is there a trend? Is there this? Is there that? And they're starting to create their analysis based on this, right? Now, let's come back over here, right? I'm not even going to talk about the mid levels. We're just going to talk about the supply and demand zones. Now, look, we're going to come back to over here. Let's get more areas to buy and sell, right? Let's come back over here. get these red bars. Boom. Now, how can you have confidence that price will sell at SRT levels and not break and become bullish? That's a very good question. So that has to do exactly with our training yesterday on support, resistance, and trends. So I'm gonna give you the theory one more time on this training for those that are watching this and did not watch yesterday's class. I'm gonna keep this simple, okay? I call this the price action, right? Rules of engagement, right? Or you can call this the theory, THEORY. You can call this the theory of price action if you like as well. I've made up both of the names, but they sound super good, don't they? Right? So this has to remember, trading is subjective, right? Support, resistance, supply, demand, trends. When price comes to these zones, it's all subjective. But these serve as areas where you can look for opportunities to buy and sell. So I have a theory of price action that held up, and I showed you guys about 15 different examples on yesterday's training. So it goes like this. The first time price hits any level, so one hit, right, is the origin. ORGIN is the point of origin. So this is where it starts, point of origin, right? So you can't do nothing with it. Now, the second hits of any zone, right, this is a potential, POTEN, this is a potential area to buy or sell, right, with the proper confirmations. The third hit of any support, resistance, or trend is another potential area to buy or sell, right? So this is, good for trade analysis. This is good for trade analysis. Now the fourth hit or more, right? The fourth hit or more to any potential zone. The fourth hit or more, right, has potential to break, okay? Has potential to break. So this is a warning area. It doesn't mean that it's gonna break on the fourth hit, right? It just means that once it hits a support, resistance, or trend for the fourth time or more, this is an area where the market can potentially break through. So this gives you a really, really good theory about how to interact with a specific market, right? So as an example, right, this is a very golden rule. So we're gonna make this like a golden color. So let me show you an example. Look at how the market came. It hit once, it hit twice, it hit the third time. The fourth time it broke through. Let's come back to the support and resistance, right? It hit once, it hit twice, it hit a third time. So the first time it hits that zone, that's a good area. Second time it hits that zone, it's still strong. It's a good area. Third time it hits the zone, it's still a good area, right? But anytime that the price comes back to the area a fourth time or more, now this is where I'm expecting that price has the potential to break through, right? And it works the same way. So let's look at this area of structure, right? So this was this area, right? So let's look at this over here, right? When this support and resistance area started, it broke through. Here goes the first hit in that area. Then the market came back. Here goes the second hit in that area, right? So good sell-off, good sell-off. The market comes back to this area. What happens? Good area to sell off. It comes back a fourth time. It comes back a fourth time to this area. Okay, you can still sell off. But now look, if you see the fifth time or on, look what ends up happening to this particular area. Now this particular structure level is not really relevant. Look, it's like it's now breaking through that area, right? It's breaking through the area. 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 It's breaking through the area because the market created a new level of support and resistance in the market. So anytime you have a new zone, as an example, let's look here, right? The market pushed up into this zone and it started this new level. Now look at this new level right over here within the market. Look at that brand new level right over here within this market, right? Look at that new level. So let's say you were trading over here. Let's say you were trading over here and the market came back right over here to this level. Market came here, it rejected. Support and resistance. Market came back a second time, good area to buy, boom. Market came back a third time, good area to buy, boom. Now the fourth area and on, right? This is where I'm worried that the market's going to start breaking through. And you see the next time the market came to that area, what did the market do? The market broke through that area, right? So remember, price action, support, resistance, it's all subjective. But if you trade it, you have to understand how to trade it, because there is so many levels of support and resistance. There's so many levels of supply and demand. But you have to have a concept on how you're trading the specific support and resistance. Okay, so having a rules of engagement or having some type of philosophy of how you trade those zones will keep you in more in the profitable area, right? So I'm going to get rid of this price action rules of engagement. I'm going to keep it on the side, and we're going to return to areas of support and resistance, and then we're going to get into price reversal zones. Okay, and you guys are going to love this. So let's continue here. So here's your big area of support and resistance, right? Let's come over here. Okay, we're on the 4 hour. Remember, we're just looking for major areas of support and resistance, so you guys know the areas where you want to create trade analysis at. Okay, so look, this major structure level became new resistance. When price broke it, it became new support. Very, very good area, right? So you had 1, 2, 3 opportunities to buy here at different times, and each one of these opportunities gave you over 150 pips every time price returned to that particular zone, right? Now, let's talk about this next area. So remember, this was your next major zone right over here, right? There goes your low, there goes your high. That was your next major zone. Now look at what happened. As price started to make its way up, from this particular zone, as price started to make its way up back to this major area of support and resistance, let's take a look at this area right over here, right? Depending on how you look at this, right, whether you put it low or whether you put it high, here was your zone. So the first time price returned to this area, to this major area of support and resistance, you had the first area to sell right over here, right? Had the first area to sell. You can see the market gave you that big M pattern right over there, and you was able to sell off in that market, right? This area of support and resistance gave you over 60 pips. Now, the market returned to that support and resistance the second time, right? Came back to that zone. What did it do? It gave you another big M, and then that gave you another area to sell, and then the market this time dropped off 100 pips. Now, look, the market came back to this area. So depending on how you're looking at this particular area, because this is on the 4 hour, you can either sold at the high over here, or you can also see that right here in this area, there was another big head and shoulders pattern right over here in this area, which gave you another opportunity to sell where? At this supply area, right? And then if you sold at this area, you had another opportunity to get 50 pips. The market came back, retested that head and shoulders. What happened? Another area to sell and get another 50 pips in the market. Until eventually, what ended up happening? We exhausted the hits in the market. 1 hit, 2 hits. This is the 3rd area where the market dropped off. Here goes the 4th area where the market dropped off. And now the 5th area we're on, right? The 4th area more, we're looking at the market breaking through that zone. Okay? Now look, we're going to come back over here. Look at this big area. This area of support and resistance up here is yet to be touched, right? This area is yet to be touched. You see that price, it's making its way up to that area. So when price comes back to this area, more than likely, what do you think is going to happen? More than likely, right? Let's talk about this again from a fresh perspective. The market comes back over here. There goes your point of origin. That was the area to sell. So when the market comes back to this area over here, this is going to be another area where the market is going to potentially sell off. Once the market comes here, this is where you're going to want to make the market sell at that area. And now you have all of this potential to capitalize on a 60, 70 pip trade in that particular area. How? Simply by looking at key areas of support and resistance in the market. Now, as you get deeper and deeper and deeper into support and resistance, you're going to see that there are other areas of support and resistance as well. And these areas also serve as good places to buy. Oops, 1 second. These areas serve as more places to buy and more places to sell within the market, right? Let me show you an example. Look at how the market, one more time, look at how the market came to this swing high right over here, right? Remember, you're just looking for your swing highs and your swing lows in your trading zone. This is the data. So you look for where the demand zone hit. You look for the supply zone, where it hit right over here. All of these swing highs and these swing lows, this is all of the data that you can use, right? From the zone, from here to here. This is your trading zone. One more time. This is your trading zone. So you get to use all of the data in this zone to help you create areas of support and resistance so you can find areas to buy and sell in this area, right? Does that make sense to you guys? If it does, I want you guys to type in 888 in the chat box, right? How do you know how far down the trade is going? Well, again, once you have a support and resistance, there's a new trading zone. There is a new level that you're trading. And I'm gonna make that noticeable to you guys one more time. And then I'm gonna show you guys price reversal zones, and then we're gonna wrap up this class, okay? So look, one more last time on support and resistance. I'm gonna show you the levels, and then we're gonna get out of here, okay? So look, this was a resistance. Here goes the resistance. Here goes the pullback in the trading zone, right? Actually, look, what I'm going to do is just for visual purposes, we're going to come over here. I'm going to leave this highlighted, okay? Now here, for visual purposes, this was your pullback area. Oh, sorry, right here, this red was your pullback area, was one of your high points. So, you know, anytime the market comes back to this area, it's a potential area to sell. And we're going to talk about rules of engagement, the price action theory. There goes the first hit. Market comes back over here. Here goes the second hit, right? Good area to sell. Boom. Market comes back again. Here goes the third hit, right? Here goes the third area, right over here. Boom. Good area to sell. So in this area, that was over 100 pips. And in this area right over here, after you sold off, that was almost 200 pips. So you have point of origin 1, second hit, third hit. Now the fourth hit, or the fourth major area in this zone, when price comes back to it, here is the potential break. And that's exactly what the market did. The market broke out in that particular area. Broke, retest, and now the market is coming up to a new zone, right? So that's all the theory, right? That's the entire price action theory right over here for support and resistance. So now that you guys know how to mark up support and resistance in the market, now watch this. Oops, sorry, let's put this back. Let's get rid of these red dots. So now you guys want to know, well, hey, where is the market going to go to? This, that, and the third, right? So that is all now based on, that's all subjective. And that's all now based, okay? Let's get rid of that. Let's get rid of that. That's all going to be based on the levels that you have in the market, okay? That's all going to be based on the levels that you have in the market. So let's show you again, right? Here, this was your first level in the market. This level, again, is your trading zone, right? However you want to look at that. Wait, what's going on? Right, there we go. This level right here is your trading zone. The market comes up, hits the support. Here goes your second level, or your second trading zone, right over here, right? Boom. Okay, there goes your second level. Price comes out, price comes up. Here goes the third level that you have in the market. So you guys see the levels now? Level 1, level 2, level 3, right? And now there is a potential fourth level that this market is giving you right over here. You have a potential fourth level that this market is going to give you, whether it's here or whether the whole level is up here. This is the next potential level that you have in the market, okay? And now if you come back to support and resistance, remember we talked about price is carrying, right? Remember, the trends are carrying the levels up in the market. So when you get a trend line and you start connecting these low points in the market, look what it's doing for you guys. It's simply giving you your levels. Look, here goes the trend right over here. Boom, 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 boom. It's helping you carry your levels in the market. And as long as it's above the trend, we're in what's considered an uptrend on a major scale. If you make an internal trend over here, look at how you look at this, right? Again, let's just, guys, look. We talked about this yesterday, trend lines. 1 hit, point of origin. 2 hit, on the market. 3rd hit, area to buy, right? This was from yesterday's training. We're just tying it together with the levels and with the support and resistance now. Boom, there goes the first hit on that initial trend. 2nd hit, right here on this initial trend, right? Combining with your price action, right? 3rd hit, right here on that trend. That third hit on that trend, look what it did, right? Even though we're in the level, look at the support and the resistance. That support and resistance right there is giving you more confirmation to buy in the market. The fourth hit on the trend, what ends up happening? The fourth hit on the trend ends up being a potential area to sell, right? That's where you want to see a potential break in the market. And look at how the market broke the trend. 1, 2, 3, 4, broke that trend, opportunity to sell. Now, when you sell, how far down is this market going to go? Well, look, you have this area of support and resistance, and then you also have this level right down here in the market. So how do you interact with these levels? Let's talk about this. 2 seconds, just so you guys get how this works. Market breaks the trend. Look at how many hits now we're at this support and resistance level. Again, it's just the theory, right? Here goes your first hit to buy at this support. Here goes the second hit, buy at that support. Here goes the third hit to buy at this support area. Here goes the fourth hit in the support area where you're expecting the market to break. And guys, look, you do get a little reaction, but look what happens. The market ends up breaking right over there. So you knew the trend was going to break here based on the price action theory. And then you knew that this support level was going to break based on the price action theory. And then now you have this next level of support. How many times did the market come to this level of support, right? The market broke in. Look, this was the new level. The market broke in over here, right? So if you look at this as the first hit, you could potentially, right? But let's just come over here. Here goes the first big hit on this support. First major hit. Now, when the market comes back to this support, you're looking for another major hit, right? This support level is not ready to break, right? So based on this support, you knew this was ready to break. This trend, you knew that was ready to break. This support was not ready to break. So look what happened. First hit in the zone. Second hit of the zone, goodbye. Third hit on the zone, goodbye. Boom. On this first hit, 75 pips. On this second hit over here, this market ran up over 200 pips. But if you were selling this area now, if you were selling either up here, if you were selling up here, right? What are your take profits or levels that you're looking for in the market to take profit? Well, here goes your first level to take profit. Here goes your second zone to take profit. And then here goes your third zone to take profit. Remember, every time I'm going to write this down, right? Because we have to wrap this up. But every take profit zone, right, is another potential. My goodness, what the hell? Is another potential entry zone. I want you guys to really think about that for a minute. Every take profit zone is another potential entry zone. Because think about it. If a trader's saying, hey, take profit here, they're thinking that the trade might stop and reverse at that area. That's why it's a take profit. So that means that every time you're looking for an area to take profit, that's another potential area that you can buy or sell. Come on, guys. I need you guys to think. Think like expert traders. Think deeper. Don't be a basic trader, right? We're here to build foundational millionaires right here on this zone. More 6-figure and 7-figure traders than ever before are going to come out of this boot camp because we're giving you the source. You will not find this level of training anywhere on the internet. I promise you. You get it right here. Companies should be paying me $100,000 a month to teach you guys this kind of stuff. Okay? So take advantage. So look, every take profit zone is another potential entry zone. All righty? Now that we're done with all of this, okay? Now that we're done with all of this, okay, because I gave you guys some source today. All right, the last thing, foundational millionaires. I love that, right? The last thing that we have to cover now is what's known as price reversal zones. Remember, these price reversal zones are certain support and resistance areas that will give you the best opportunity to buy and sell in the market, okay? We'll give you the best potential areas. If you guys are learning something new, I want you to type a money sign in that chat box. Type a money sign, drop an 888, type source in that chat box. Like, let me know that you guys are actually learning on this particular webinar. There needs to be hundreds, thousands of more people that get onto these webinars, okay? So let's do this. So let's talk about this last thing right over here. Okay, so price reversal zone. So I'm going to get rid of all of this amazing stuff that's here on my screen. Okay, I'm going to get rid of all this amazing stuff on my screen. Remove all drawing tools, going back to a naked chart. Now, this next 5 minutes, I'm going to teach you guys price reversal zones, or what I believe some people call order blocks. And these are going to be some of the best areas for you guys to find buy and sell opportunities. Okay, so I'm going to show you this example. Okay, I'm going to show you these two examples. Okay, I'm going to show you these two examples in a buy situation and a sell situation. And then once I show you on the chart, you guys are good. So let me show you. All right. So look, if the market is coming in a downtrend, if it hits a level, reacts, breaks through, hits the level again. All right, let's just do this. Okay. So if the market is downtrending, if it hits a level, reacts off that level, breaks through that level, and then hits the level again, right? This right here is known as your price reversal zone. Okay. So I'm going to show you guys. Oops. Sorry. This is known as your price reversal zone, right? Your PRZ, your price reversal zone. I think it's called the order block, right? For the institutional guys on here, right? So this is a PRZ zone. So when it hits the support on one side and then hits it again on the second side and reacts off of it, right? So once you have 2 points of contact to this area, so here goes one. Let's make this black. Okay. And then you have the second hit over here. Now, what this means is that when this market breaks through this level and retest this area right over here, this is going to be the absolute best buy that you can take in the market. Okay, right there. Right, so I hope I explained that right. If you get a hit on the outside and a hit on the inside, once it comes back through and retests this area where they hit on both sides exclusively and cleanly, this is going to be the best area to buy, right? So this is the market coming in a downtrend, and then you buying up, and it works the same way if the market is coming in an uptrend. So look, and I'm going to show you right here. If the market comes up, hits a resistance, right? If it wait, this is downtrend, uptrend, yeah. Boom. So if it comes, it hits it, it reacts, right? Goes through, hits it again, and reacts, and then comes back up. It can make a double top, it can go higher. It really, really doesn't matter. So this is why I'm going to show you guys in the market. Okay, so once it hits this area twice, okay, very cleanly in a specific area, oops, right over here, boom and boom. So if it hits once and it hits the second time, when the market finally breaks through that area and retests this area right over here, this is going to be the best PRZ zone that you can take to get the sell inside of the market. Okay, and I'm going to show you guys like 2 or 3 live examples because it happens all the time. Okay, can this be used? If all this can be used for any chart? Yeah, well, I mean, I only trade Forex. I don't trade, Bitcoin or cryptos or stocks or anything like that. But, all these principles, I'm sure, work everywhere, right? So, boom, right? You get both hits on a specific zone. When it breaks a retest, that becomes the PRZ, the price reversal zone, or what I think is called the order block. So let me show you guys some easy examples. Look, right? Let's look over here. The market hit the low right here, and then when the market came back, it hit a high right here, right? So forget the theory of support and resistance right now. You will use this for support and resistance, but let's just keep this simple right here. Let's just call these the price reversal zones. It hit on the outside, it hit on the inside. Hit on the outside, hit on the inside. Whenever the market, right, comes back, so when it breaks through and retests the area, boom, there goes your PRZ zone right there. Boom, you get the big move. It comes back, boom, you get the big move right over there. Let me show you another example. This happens again and again and again anywhere in the market. And you see this predominantly with with trending markets. So let's see where I can show this for you guys. See, these zones didn't connect. You kind of want the zones to connect over here, right? So you see how these zones didn't really connect, right? It's just like an open area. But this would be another example of price hitting on the outside, price coming back, hitting on the inside. And then once price returns to the zone, right? There goes the PRZ zone, and boom, you get the hit through. So it's the same exact concept. Look at the concept right over here, right? This was the sell concept, and this was the buy concept, right? So look at the sell concept, and then look at the buy concept. This is the sell concept. This is the buy concept. Let's look at the they're actually backwards, but it's all good. Look, market came here, right? Market came here, reacted. Market broke through, reacted, right over there. This becomes a PRZ zone. This becomes a PRZ zone. So now if the market comes back to that area, you can sell. But if the market breaks through this area, this is where you want to be able to buy up in the market. But it has to be the first hit after. It can't go for long periods of time. So it's a price reversal zone. It has to be in a certain area. Same thing happens here. It hits here, comes up. It comes back down, hits here. That's the PRZ zone. So sorry, this is the correct concept here. It breaks through and it retests. Boom, that's your price reversal zone. So this wasn't an actual price reversal zone. Pardon me. I was just getting a little too excited. This is the big price reversal zone over here, right? Let me try to show you guys one more example to keep it clean, right? It has to be both sides, okay? So here goes the price reversal zone right over here, right? We had a clean hit on the inside and a clean hit on the outside. Here goes the price reversal zone right over here. The market came down, hit that zone, reacted. Boom. Market broke through the zone, retested the zone, reacted. Boom. So now it's clear that there are two specific points. Here goes this point right there. And then here goes this point right here. So it was a support on this side. It was a resistance on this side. This created what's known as the price reversal zone, right? Or the PRZ, right? So always mark your charts up and have PRZ zones pending. Always set call levels and price alerts at PRZ zones. So now that this market right here, look, I'm going to replay this. Now that this market broke through, right? Support, resistance. Now that the market broke through, we know that this is a PRZ zone. So what we're going to do is we're going to set, let's say, a call level or a price alert for this level at 110.200, right? We're going to set a price level at 110.200. So let's say you set a call level. Okay, we're going to do this. We're going to change this to 110 coordinates. Perfect. 110.200. That is going to be your call level, your price level. This is your PRZ zone. 110.200 right here, right? 110.200 right here. This is where we're going to end the class. Let's look in real time as the market returns to this zone. Okay, I forgot to drop down the time zone on a 1 hour, because you see it's a lot clearer, but we'll do that. So look, let's go. Boom. Market's going as high as it wants. Now look. Okay, well, obviously it literally missed that wick of 110.200, right? But let me show you guys this cleanly over here. Look at this specific area right over here. Look at that specific area right over here. This specific area right here, right? The high of this wick, the low of those wicks right over there, right? There goes those wicks. Here goes these wicks. This is the price reversal areas right over there. This right here, once the market retested that PRZ zone in this area, that was the buy opportunity for you to take. Okay, for me, that works almost every single time. Okay, that works almost every single time for me, and it's the most prevalent the first time that price reacts to that zone. That's when it's the most prevalent. It can still work after the fact, right? It can still work after the fact. Look, if you see here, price established this as the support, and now we go into 1 hit, 2 hit, 3 hits, so on and so forth. And now I'm just going to make this example for you guys as rules of engagement. So we bought here. So the third time that price comes to the zone, that could be a potential area for us to buy. Let's see if it works out, because I literally don't remember. Let's just let this play through. Boom. Look, third time the market came right over here. What happened? Big reaction. It just happened fast. 1 hit to buy, 2 hits to buy, third hit, potential buy. That right there alone would have gave you 50, 60. That went up 65 pips on that third hit. 65 pips is a good hit on any day. The fourth time, what happened? Fourth time, market ended up breaking through. right? All rules, all price action, rules of engagement. Just learning how to trade and trade and trade and trade. And look, big inverted head and shoulders. What did the market do over here? Broken retest your area. Here goes, look, here goes your next price reversal zone. Wow, look at this. I didn't even know that this was going to do this. Look, here goes your hit on the outside with your wicks, your candles. Here goes the hit on the inside. So hit on the outside, hit on the inside, right? So anytime price breaks this area, this PRZ area, it's going to break it, and that's going to be the best area to buy. And look what happens. Price breaks it, retest it, boom, another big trade. That first hit in that area, another 70 pips. Okay, ladies and gentlemen. So now you guys know what PRZ zones. So just make sure that you're using PRZ zones to trade brand new levels in the market. You guys know support, resistance, trading zones, supply, demand. If you're confused about anything, just watch this video as many times as you can, so that way this clicks for you. Alrighty. Now, when somebody says, how long did it take for this for you to click when it wasn't basic for you anymore? This is a lot to learn. It's a lot to learn, but remember, there are 4 levels of competence in the market, okay? There are 4 levels of competence in the market. So let me show you this, okay? There are 4 levels of competence. I don't know why that's there. There are 4 levels of competence in the market. You have unconscious competence. This means that you do not know what you do not know, meaning that you do not know what you can trade or how to trade because you just don't know that you can do it. Then you become what's known as conscious incompetent. That means that you are aware, but you're not yet proficient. So now that I just made you guys aware of these key elements in the market, you know that they exist, but you're just not good at trading it. So now you have to practice it, practice it, practice it. Now, once you practice it, you're going to become what's known as conscience competent. Conscience competent means that you are able to use the skill, but only with effort. This means that now you've studied the video, you know it's there, and you're starting to learn how to trade it. So you're like, okay, this is a price reversal zone. Let me start doing my demo trades here. Oh, this is a major support and resistance. Let me look for buy and sells. Oh, this is a big key zone, a big supply and demand zone that Manny was talking about. Let me put my eyeballs here and look for areas to sell, right? So you're conscious competent. And then what happens is that you start to do this so much that you become what's known as unconscious competent. That's where you get to the point where when you're looking at the market, you don't need to have no markups. You could just look at the market and you could just see it. When I look at them, I can see the supply, I can see the demand, I can see the support, I can see the resistance, I can see the trends, I can see the patterns, I can see the price reversal zones, I can see everything without marking it up. It's just, it's in my mind's eye because I did it so much. It's in there so deeply that I can call out trades and just know and get excited just by looking at a naked chart. The reason why we mark up charts is for 2 reasons. 1, we mark up charts to make it visible to you guys. And 2, we mark up charts so we can keep track of our analysis. That's the only reason why we do it, to perfect it, to find pinpoint coordinates and do even better, right? So when you guys say, hey, how long did it take? For me, it took much longer than anybody else because I didn't have mentors before me. I only got to learn from Chris Terry. So I had to wait every time Chris Terry threw out a video. I had to wait for the source. He talked about it here. I had to wait maybe another month to talk about the source, right? So it took me a long time to get this. But now that you have traders that are so proficient in trading, we can give you all the source in one video, throw it up on a recording, and now you guys can learn faster than we learn. That doesn't mean that you're better than us. It just means that you are now on the same level as us. That's all that means. Our job as educators, the whole transition, the whole concept of human evolution, right? The whole concept of human evolution, right? Think about being a parent. When you're a parent, you learn everything. Now you try to teach everything you know to your kids to make your kid more equipped to life. Now, when your equip is more kids to life, you want your kids to do better than you, to trade better than you, to have a better job, a better career than you. You want your kid to be your predecessor, to exceed you. And then when your kid and your child exceed you, they know how to trade better. They know how to condense the information even better. And then they're going to teach their kids and their students how to be even better traders. And that's why as the years, as the months, and as the years progress, people are getting better and better and making profits faster and faster and faster than trading ever before. So my goal here is not to have you guys wait a year, 2 years to learn how to math. No, I'm giving you source in 30 days. I can give you 10 classes, and in 10 classes, you'll have all the skills that you need to crack 100,000. Now it's just your turn to go from unconscious incompetent to become aware, to become conscious incompetent, to then apply it to become conscious competent, and then to become so good at it that you become unconscious competent and you are messing up those charts. Okay? That's the game, baby. That's the game. That's how we do it. And remember, I'm from New York City. I got people watching me from London, from the Netherlands, from Switzerland, from Europe, from the islands, from South America. And you guys are not used to my accent. You guys are not used to my mindset. You guys are not used to my demeanor. But I'll tell you one thing, baby. I will give you that New York state of mind. I will give that to you. And that's the hustler's mind. There's no whiners on here. There's nobody coming on here. I can't do it. If you lazy, get off my session and go look at somebody who can't trade and go blow your account. But if you are here and you have that New York state of mind, you got that hustler's mindset. You are here to win. You are here to succeed. You are here to go pro in these markets. Then you come here and you learn. You put your head down and you learn and you learn and you learn. And then you come back to me and say, yo, Manny, hit my first 1,000. Boom, Manny, hit my first 10K. Boom, Manny, hit my first 100K. The only thing that you guys can do for me is show me gratitude and show me homage. You see me at an event, thank me. You see me at an event, take a picture, put me on social media, say, hey, this is the guy I learned from. Because as an educator in this company, my purpose in life is to serve. The best leader, you're not a leader unless you have people to lead. So how do you become a leader? By becoming a servant. I am on this platform to serve you. I am on this platform to help you grow. That's it. That's it. Let people know that, hey, this was the guy I learned from. That's all I want. I just want a little bit of praise because that's what makes me feel good. A person who was put on this earth to serve, the best way to pay them back is not with money, but to pay them back with gratitude, pay them back with kindness. You see me, say hi, say thank you. Let me know that you learned something from me. That means the world to me. That's all I want. I don't need nothing else. I don't need $1. I don't need to charge you. My job is to be an educator to you. That's my job here. That's why the company chose me to become the new voice of the IML Academy, because I represent money. I represent more than money. I represent this company. I represent a dream, an idea, a transformation. It's not money. It's not clout. It's not this. It's not that. No, we are looking to push this company to the $1 billion mark, ladies and gentlemen. So if I have served you well, I want to say thank you. Okay, say thank you to me. Tag me on IG. Put your teams on here. Tell your chairmans about me. Get the new members on here and let them learn. Give me a bigger audience to teach. That's all I want. Because there are thousands, hundreds. There is over 100,000 active members. Tens of thousands of people every day that are logging into Go Live. And what am I getting? 100, 200, 300 people a day on my sessions. 2, 3, 4,000 people a week on these sessions. Come on, guys. We could do better. So again, guys, thank you so much for choosing me as your educator. Hope you guys are learning. And remember, okay, we're going to be continuing this IM Bootcamp for the next couple of months, where we're going to be going every day in depth into more and more knowledge. So you can come to recorded sessions, come right down here to the bottom to see the bootcamp videos, or go to recorded sessions to see them. But I have everything on the favorite session. So just come there to see everything that you want. But the best thing that you guys can do is just come to my website, Educator Manny Q, right here. Tell your teams to come here. You have new members, bring them here. But guys, just come here, and all of the recordings are going to be here, and it's going to be broken down. IM Bootcamp right here. Market geometry here. Correction class here. Strategy class. All the stuff is here. But what I highly recommend is don't go through anything. Just go through the bootcamp. Teach everybody to go through the bootcamp. Don't overwhelm them. Just come back every single day. Come right back here at our new time, 10 a.m. Eastern Standard Time. Or if you missed the live class, come back, check out the recording every day and watch the bootcamp. We're going to be here doing this entire bootcamp until we're out of videos and out of content to teach. Then we'll go back to live trading. All right. Once again, ladies and gentlemen, guys, thank you so much for being here with us. I love you guys. I appreciate you guys. I'm going to see you guys next week at our new time, 10 a.m. Eastern Standard Time.